What's going on in the Atlanta real estate market? What's going on with home values? Where are the best schools? Cleve has all the answers for you. Call Cleve Atlanta Real Estate Show on Talk Radio 640 WGST. Now, here's Cleve Gaddis.
You're listening to the Call Cleve Atlanta Real Estate Show on Talk Radio 640 WGST. If you need to reach us, Gaddis Partners Remax Center, you can call 770-497-0000, or you can go to gogaddis.com. That's GOGADDIS.com. One more time, GOGADDIS.com. We're joined on the line by my good friend and closing attorney, Joe O'Kelly. Good morning, Joe.
Good morning, Cleve. How you doing?
I'm great. I am great. O'Kelly & Sorahan is a full-service law firm. They have 15 offices throughout Metro Atlanta. They specialize in residential real estate closings, including home purchases, refinance closings, corporate relocation, and real estate contract review and title insurance matters. You can reach them by calling 770-497-1880, 770-497-1880. They have an office near you, and they will take care of whatever real estate-related needs you have. Hey, Joe, I want to talk about a couple of important subjects. Number one, we got a question from a listener a couple of weeks ago, and I apologize we haven't answered it on the show before now, but wanted to know if it makes sense to get a bridge loan. Now, Joe, I have not seen a buyer get a bridge loan in years. The last time I saw somebody get a bridge loan was probably 7 or 8 years ago. So start out, first of all, tell us what a bridge loan is, and then tell us whether or not you see anybody getting bridge loans to purchase a new home today.
Back when the market was so hot before the crash, you would see bridge loans because people would want to take advantage of buying a new home so that they could hold it for a little while and then sell it for more money.
Right.
And so you take your current home and you would see other homes and you would borrow money based on the equity you have in your current home.
Yeah, so let's say
a new home.
Yeah, let's say you got a home's worth $300,000, and let's say you only owed $150,000 on it, and then you could go to your local community bank and say, I want to borrow against the equity of my home. Maybe they'd let you borrow up to 80% loan to value, so they let you borrow another $100,000. Just guesstimating on that house, and you use that $100,000 to make the down payment on your new home. One of the issues with a bridge loan is typically the interest rate was kind of high, and sometimes there's just easier ways around it. So what do you see people do? Have you seen anybody do a bridge loan in the last few years, Joe? Not at all?
Not a bridge loan. I mean, I hardly ever see it anymore.
So how do people solve that problem today? Do they do it with a home equity line of credit?
When someone wants to go, again, if they were going to do it, they would probably just do a new loan where they get 97% financing or something like that.
So they wouldn't borrow. So they wouldn't borrow against their existing home. They would probably just get a higher loan-to-value loan on their new home. So if they knew once they sold their home they were going to have the 20% down payment, maybe they would go ahead and borrow 95% or 97% of the new purchase price. Maybe they do it by an 80% first mortgage and a 15 or 17% second mortgage. And that 15 or 17% second mortgage, maybe it's a home equity line of credit or a fixed second. And then when they sell their existing home, then they pay off that line of credit.
That's right. They could do it that way, or they could do a FHA 97% loan and then do a refinance to an 80% once they have the sale from the other home.
You know, something that people don't talk about a whole lot is some lenders will include a recast agreement. Do you see recast agreements in mortgage documents or security deeds often, or the note?
Yeah. Been years since I've seen anything like that.
Really? Well, and I'm not sure, but I think, Joe, there are some lenders that will still allow a borrower to do at least one recast. Sometimes you have to put it in up front. And what that means is if I was going to go buy a house, say I was borrowing Joe's house, and I wanted to get 95% financing, but I knew I was going to get 20% equity from my existing home to put down on the new home, I go ahead and borrow 95%. But if long as my note with the lender says that I can get a recast of my payments, then when I pay that 20% down, they will go and recast the payments. So they will change the amortization. So, if I borrowed $100,000 in a normal note, Joe, if I put $20,000 down, it doesn't change my payment at all after the fact, right? If I put it down, if I pay extra principal.
Right.
But with a recast agreement, maybe you can. So people that are looking to get equity out of their existing home to invest in a new home, sometimes a line of credit or asking your lender if they will allow you to do a recast or have a recast agreement in the mortgage makes good sense. Joe, talk to us a little bit about the difference between an enhanced title insurance policy and a standard title insurance. In fact, start out and tell us what a title insurance policy is.
So a title insurance policy will protect the land, right, the title to the land and no encumbrances on the land that would affect that ownership in a negative way.
Okay.
That's the basics. And, of course, the house sits on top of the land, so it's attached to the land. And so it would also protect basically your house. And an enhanced policy versus a standard policies have always been around. Enhanced offers more protections, things that started showing up and title insurance kind of claims that really weren't protected under standard, but the title insurance companies wanted to give a little more coverage so that they could help the homeowners, but they also needed to get a little bit more premium for it.
Right.
They cover things that ordinarily they could say, I'm not going to cover, but they wanted to cover, like some limited amounts of money that you might get for any kind of survey exception. That's a good example. Basic title insurance won't cover you for anything a survey would have shown.
Right.
But on an enhanced policy, you may get some limited coverage. You may get some protection to fight in a lawsuit as opposed to just saying no. If a survey would have shown it, we can't cover it.
So in the past, when we all thought that the mortgage companies were requiring us to get a survey on the property, it was actually the title insurance company that was requiring it because that was the only way they were going to protect your boundary lines would be for you to have a survey up front. Is that right?
Well,
in the past?
Years ago, they used to require it, and then they'd stopped requiring it, but they said whatever it would have shown. So if anybody ever asked me, I would have said, yeah, you should get a survey, but they wanted to get it for title insurance purposes. And I said, well, it'll only show you what you're not covered for. But you really want to see whether or not you have a pipe running through your backyard or not. You want to see who else has rights on your property, and a survey is really the only thing that's going to give you a picture of that. Let's talk about the funds to close. If you just joined us, you're listening to the Call Cleve Atlanta Real Estate Show on Talk Radio 640 WGST. We're joined on the line by Joe O'Kelly of O'Kelly and Sorahan. Joe, if you're going to have a closing, you're going to buy a piece of property in the Georgia market, and you have to make a down payment or send to the closing attorney more than $5,000. How do you get it to the closing attorney today? Today, everybody wires money to the closing attorney. So a lot of people back in the day, or only a few years ago, would accept cashier's checks because that was considered good funds. But it seems there's a different reading of that now, so everyone wires funds in, especially when the crash came. And there were some funds that weren't liquid at the time, or fake cashier checks.
Yeah, well, there was also a big mortgage company that used to just write regular checks to everybody, and I think there was several $1 million worth of those that actually bounced all in one day. Joe, thank you so much for being a guest on the show.
This is Call Cleve Atlanta Real Estate Show on Talk Radio 640 WGST.